Good night, everybody. Today is April 13, 2016. Tonight's webinar is going to be about candlesticks. I did a little flash webinar. I had one, yeah, where I just kind of went through a bunch of little things, but I feel like I could do some more in-depth candlestick readings with you guys, doing some candlestick patterns as to go with your formations that we've been doing for the last couple weeks. They go hand in hand, so I'm not just going to teach you one thing and not teach you the other. So I'm going to teach you some candlesticks. For those of you guys that don't follow me, it's at BarryMohan81, and you'll find a link to all the other stuff that I do and the room that I trade at, awesomecalls.com. So let's get into it. Now, I don't need to flip through a bunch of charts for this because candlesticks are candlesticks, and let's just get into a fun chart from today, since we can just go into this. Since it's gonna be a what's up, John? Since it's gonna be since it's gonna be a candlestick reading type of webinar, we don't need any indicators. So let's remove all indicators, naked charts. Delete those. Delete those. We don't need any indicators since it's just a pure candlestick reading charts webinar. Okay, so let's go through this. Can anybody just type for me in ticker, and let's just see if that's live over there. I just want to make sure. And so that I just typed something in there. Just let me know if it's live, and that's all I need to know, so that we have no mix-ups. Yeah, I can do a 5 minutes on RPRX. Okay, so what we're gonna get into is just basic candlesticks. That's it, just a single bar. My time frame that I'm on is a 5-minute time frame. Now, if you're using 1 minute, it doesn't matter. If you're using 15 minutes, it doesn't matter. Candlesticks are candlesticks, and no matter what time frame you're using it on, just keep it on that time frame, so that is my sound clear? I'm having somebody that said they're having tech sound problems. So if you're using candlesticks, if you're using a certain time frame, keep it on that time frame. If you switch up your time frames during trading, if you're switching from a 5 minutes to a 15 minutes because of a continuation, you're gonna have an issue reading your candlesticks properly. Okay, so we're all good. Anybody that's on Ticker TV, just type in something there for me, please. If you are there, just want to know if I'm live over there on Ticker. So, whatever time frame that you're on, if it's the 1 minute, 5 minute, 15 minute, I don't care where you trade, what time frame you trade. I do care, but we'll get into that. But just keep it on one set time frame while you're trading that position, because the more you switch around your candlesticks itself. Remember, this webinar is just about candlesticks, okay? Not about formations or anything, just pure candlestick reading, okay? So I'm gonna get into it. I'm still gonna do the 5 minute because that's just kind of what I like using the 5 minute on when I trade. So I'm just gonna use the 5 minutes. So let's get into some of the major ones. If we want to have a list of all the candlesticks out there, there will be a lot, and there are just a few of them that I go through or that I use, that I look for, because those are the main ones. Do they have to be exactly like what it looks like in the pictures? No. Do they have to just look similar to what it is? Yes. Okay, first couple things I want you guys to understand when reading candlesticks. Okay, obviously, let's just get into really a little more detail about the candlestick itself. Okay, the candlestick itself. This piece that's shaded is called the real body. So this is the body of the candles. These extended pieces on the top are called wicks. These extended pieces at the bottom are called wicks. Okay, so that's all you really need to know. There's a real body, there's a wick, and there's a wick. Okay, you actually don't have to really care to know that. All you need to know is that's the little tail and that's the top, or whatever, or in opposite cases. In a bearish scenario, you will find that many of your candlesticks have wicks that are at the top of the trade. So many bearish signals will have wicks at the top, and you'll find that many bullish candlesticks will have wicks at the bottom. So just keep that in mind. that while you're going through your day, just something to what's up, Wall Street? So once you're going through your day and you start seeing wicks at the bottom, you're kind of thinking in your head to look for maybe a reversal or something in a bullish way. If you start seeing wicks at the top, start thinking in maybe a pullback, a negative way, a top-in a scenario, something like that. So that's just something to know just about the wicks. What's up, G? Just something to know just about the wicks. Okay, that's not really written anywhere. But it's just something that I've kind of just picked up. When you start seeing wicks at the tops, it's more of a bearish scenario. When you start seeing wicks at the bottom, it's a bullish scenario. So that's just on the wicks alone. The real body itself of the candle can tell a lot. Obviously, the candle opens, and if it pushes up into the candle, it's a red candle. If it opens from the top and it pulls down, if it opens from the bottom and pushes up, it's a green candle. If it opens from the top and pulls down, it's a red candle. Alright, so that's your colors. So you got, well, for me, it's red and green, and that's pretty much it. Dojis won't have any color, obviously, because the open and close price was the exact same during that time frame. So during this 5-minute time frame, this did not print a green or red, meaning that the price stuck right there at 159 when it opened, 159 when that 5-minute candle closed. So remember, each candle is a time frame that you're at. So if it's a 1 minute, obviously, you're going to have a lot more dojis all over the place, because in that 1 minute, the time could have stayed there. The price could have stayed there for, obviously, more than 1 minute. And you would end up with a series of blank candles a lot. So I kind of negate that by just doing a 5 minute, and that's just the way that I trade off the 5 minutes. So let's get into some of the names. There are tons of them, obviously. Let's get into the main ones. Bullish candlesticks. Let's look for a hammer. So a hammer is usually found at the bottom of a trend, and it's usually a bullish indicator as to an upside move. So like in this case right here, that would be considered a hammer right here. This right here will be considered a hammer. So a hammer is what a hammer sounds like. It's a candlestick that looks like a hammer, where the price stays at the top side of that candlestick. So that's a hammer right there, and you'll see that at a bottom of a trend usually indicates a reversal to an upside move. That would be a hammer right there at a bottom of a trend to usually indicate the upside move. That would be a hammer right there at the bottom of the trend to indicate an upside move. Another bullish candlestick is what you're looking for at the bottom of a move. Obviously, I'm only talking at the bottom because we're looking for bullish candlesticks, okay? So there would be like morning stars would be like this, which is kind of like a hammer, just a shorter wick, a little stumpier, like that. That could be considered a hammer. At the bottom over here, morning star, morning star. So these are all just kind of looking like hammer, but they may have a little bit more real body on it. So, but it's just, it's an essential type of. It looks like a hammer. At the bottom of a trend, you're also looking for a doji. Now, a doji is basically a candle that has a very small real body. So a doji could be any one of these type looking things. There's really a lot of hammers on this damn chart. Sheesh. Okay, but that's a doji, right? But that doji right there should be more like at the bottom for a reversal. So let's jump into another chart. Maybe we'll find a proper proper doji somewhere. There's no freaking doji on Nugget. It was all downside today. What went up today? VRX should have some nice candles. That had some ups and downs today. Okay. Again, look at hammers at the bottom over here. Hammer, hammer, hammer. Morning star, morning star. Just like tons and tons of indicators that was telling you that this chart is going to actually break out to the upside. And that's just candlesticks, right? So, doji, sheesh, doji. Okay, fine. I found a doji right there. It has nothing to do with this exact chart right now, but I just was kind of looking for a doji example. So there's a doji right there on this, right? In this case, the doji has nothing to do with the chart because it's neither at the bottom or at the top. It's just kind of midway, so the price just stayed there. But that's what a doji looks like right there. Inverted hammer. Now you're looking for an inverted hammer, which is exactly like a hammer, just an upside down one. And it should be at the bottom of a trend, just like this inverted hammer right here, as to signal a reversal move to the upside. So basically what happened is the price came here, opened here, it pushed up, and it pulled all the way back down to here. So that's why you have your wick extended all the way here, because the wick is actually the price movement from the top to the bottom, right? The wick didn't just develop by itself. The wick is actually the duration of this 5-minute candle from the top to the bottom. However long that wick can be. It can go all the way up here if the price went all the way up there. It can go all the way down here if the price went all the way there. So the wick itself is not just a thing. It's where the price actually went to and came back down, or price pulled to and came back up. So it's actually a representation of where the price was once during that 5-minute period of your trading. So you're looking for an inverted hammer at the bottom, signals a reversal to the upside. That's also a bullish candle. You're looking for, and I have this kind of special one where I call a rocket booster. So it looks just like a hammer. It's exactly like this here. Exactly like this guy right there. And so it looks just like a hammer. But I kind of have like my own name for it. I call it a rocket booster candle because, and it's not anywhere out there. But it's like a hammer, but it's very extended, and it has a bigger body, but it still has a nice booster at the bottom, a longer wick. So I like seeing these at the bottom of a chart. It just really gives me like a good inclination that the move coming up is a lot more aggressive, and because that's basically telling you that the price opened here and pushed all the way up here. And so it's a really nice candle for me. I like using them. I like recognizing when I see them, because I feel like it's a much more aggressive move to the upside or downside if it's on the opposite end. And I like those. Morning star, inverted hammer, regular hammer, doji star. Now you want me to start going into like names of all of these? We'll be here all night for the same things, okay? They all are kind of like the same things. If you really wanted to get into like dojis itself, there's too many names, and I think it just makes no sense for you to really learn all of them. But you just have to kind of figure out the ones that make the most sense and that apply most to where in the position of the chart that you're trading and what you expect them to do. So when you're looking for bullish candle patterns, obviously you're looking for a bullish not a candle pattern, a candlestick, sorry. When you're looking for a bullish candlestick itself, you're looking for one that's obviously on a downtrend and that holds some sort of a weight. Like if you start seeing red bars like these, but it's just another big red bar or another big red bar, then you're not really looking for any sort of reversal just yet. But if you start seeing dojis, if you start seeing hammers, inverted hammers, morning stars, any sort of sentiment that maybe there's a reversal in effect, then that's where your candlesticks are gonna help you. So your candlestick is not a reversal itself, but the candlestick is an idea that the reversals are about to happen or may be happening. And so that's basically the sentiment of the market telling you that, hey, we're not sure if we want to buy it or sell it at the moment, and that will print you a doji. So it's a graphic depiction of people's emotions, right? So if you see like a doji star at the bottom, just saying it was those, that was, screw that. I'll just get another chart. There's not enough there. Oh, there's so much good candlesticks here. I just want to get into one that I want. Okay. This is Cedro. Okay. So when you start seeing candles like this with longer wicks, it's telling you this right here, the candlestick, is a graphic depiction of what people are thinking, right? So this is a graphic depiction of that L2 at the very 5 minutes of this trade here. What it's telling you is that there are sellers here, but there are also buyers here. And there's actually, even though it's a red candle, it's telling you that there are more buyers here. It printed a hammer, that there are more buyers here than sellers. So at this point on this trade, if you were short or something, or if you were looking at this chart for a pullback, once you start seeing a candle like this, you start thinking to yourself, well, maybe I'll look for a support zone. Maybe I'll look for an area where this chart should reverse. And so that'll give you an inclination that the chart may want to reverse. So when you're looking for your candlesticks itself, individual candlesticks don't mean anything other than giving you the idea that the chart may want to reverse, okay? So the individual sticks themselves, make sure you remember that. They give you the idea that they want to turn, but it's not an actual reverse. It's not an actual let's go buy it long or short on this candlestick. It gives you the idea that it wants to turn. Some bearish candlesticks. The exact opposite from bullish ones. If you see a hammer up here and you see a hammer on the top of a chart, it's usually a bearish signal, and a hammer at the top of a chart is usually called a hanging man. And you will see hanging mans. Well, this actually, well, let's get into this since we have one right here. Succession of candles up at the top here. What you notice right off the bat, what do you notice? You see all these wicks up at the top here, right? So anytime you see a whole succession of wicks up at the top, you're kind of deciding that maybe this chart wants to start reversing, because maybe there are more sellers. Every time the price comes down, it gets knocked down. Comes up, gets knocked down. Comes up, gets knocked down. So what they're basically telling you is the sellers up here are graphically telling you through your candles that we will not let the price get up above this area over here. So once you start seeing the wicks up on top here, you start thinking, okay, well, this is the idea that this chart may want to reverse. Now you're going to start looking for a reason to want to reverse it, and that's where your couple weeks of formations and channels and charting is going to really come into effect, where you're going to tie this into that and make a trade happen. So at the top of a chart, you'll see a lot of candlesticks. Bearish ones are usually hanging man. It looks just like a hammer. It's just that it's on the top of a chart. Hanging man at the top of a chart is usually reversal. There are no hanging man on this particular chart right here, but there is one candle here that you should watch and you should learn. This one right here. It's called a gravestone doji. It's usually a very bearish candle at the top. It's usually telling you this price came up and they slapped it all the way down enough to bring it red into that 5 minutes. So that's obviously a really good bearish signal that your chart may be breaking down. There are a lot of other ones like okay, the one at the shooting star, the one at the bottom that looks just like this over here. It's called a morning star. The one at the top that looks just like this here is called a shooting star. And tombstones, hanging man, shooting stars, inverted hammer. Let's go to another chart somewhere. Not a lot of, well, there's not a lot of hanging man over here. There's one over here. That's a hanging man right there. Pattern at the top, candlestick at the top of a chart that kind of signals to you that maybe the chart's kind of being bearish. A hanging man right there. These are hanging man right here. Even though the chart went up, this, it's candlesticks. They're not like, they're not like 100% guaranteed, but I can still give you the idea. Like, okay, you're seeing these candles up at the top here. Even though it's just a small formation. Even though it's just a small formation, there was a drawback down over here, right? So you saw a hanging man up here, and then the chart did actually pull on from this area to this area. Some people, that's a huge win, 20 cents. But so the candles are not obviously guaranteed at all the time, but they can give you the idea of where the chart may want to go. Now, what you really want to use in coordination with your candlesticks themselves is you want to use candlesticks patterns. Now the patterns itself is really where your money's going to come in, because that's where you're going to understand how to actually use the individual candles themselves. So let's get into some of the candlestick patterns themselves. A bullish candlestick pattern. So obviously you're looking for this at the bottom of a downtrend. This one right here is called a Pearson candle. It's where the price opened underneath and actually pushed up to more than 75% of the previous candle and closes there. That pattern right here is called a Pearson candle. Pearson pattern, sorry. Let's try to look for some other ones. Other bullish patterns that are right here. These two candles right here, this is called a bullish harami, where the price is actually inside of the actual body of the previous candle being red, current candle being green, so it'll give you a bullish harami. I think in Japanese, a bullish harami is a pregnant woman or something. So candlesticks were invented by the Japanese back in the days with the rice traders. There's a long history on that one, but you can read up on that. So this is called a bullish harami. So that's a bullish signal right there. If you look for more bullish signals, you'll see bullish engulfing, where the real body of the existing candle completely engulfs the body of the previous candle. The previous candle obviously has to be the opposite color. So if it's a red candle, the current candle is going to be a green candle. Once it engulfs the entire thing, it doesn't actually have to engulf the entire wicks, but it does have to engulf the body of the previous candle. So that would be a bullish engulfing candle right there. So you pretty much have the main ones, which is bullish harami, Pearson, and bullish engulfing. So that's the main bullish ones. If you're looking for the bearish ones, you would look for a bearish harami, which would be here. So you have a green candle, obviously. If it's a bearish signal you're looking for, you would be looking into green candle moves. So you would have a green candle push, and then you would have a red candle that follows it. Now the red candle has to be, this is actually, yeah, this is a good bearish harami. This red candle actually just has to be inside of this previous candle, okay? A bearish engulfing, let's get a circle here. Let's move over and see if we see any of the bearish engulfing candles. Okay, here, up at the top here, that's a bearish engulfing candle pattern where there's a green candle here and there's a red candle that follows it, and this candle completely engulfs the body of the previous candle. So that's a bearish engulfing. And remember, that's opposite from a bullish engulfing. So now we're going to look, we found a bearish harami, a bullish harami. We're going to look for the opposite of a Pearson, which is called a dark cloud cover. So a dark cloud cover sounds scary, and it is scary because when you start seeing that at the top of a chart, you want to just make sure that you're not playing it anymore. Let's see if there's one anywhere here. Nope, 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 nope. None there. UVXY probably has some. This is bearish as hell today. Nope, nope. Nope. No good ones at least. They're not clean cut. I don't like that. Does this one have any? No. Why would I look at that for any bearish signals? Blue. Nope. Bearish engulfing, bearish harami, bearish harami. Nope. No dark cloud cover. Can't find a dark cloud cover to save my day in this bullish market. Nugget. Bunch of bearish engulfings, but no real dark cloud cover. I can't find a freaking bearish signal to save my life in this damn bull market. Facebook? Harami. Alright, fine. See what I'm doing live. I haven't didn't check out anything. Okay, these two candles right here. This is a bearish bearish signal. That's a dark cloud cover right there. Where the previous candle, actually the other candle opens above that candle but closes more than 75% of the previous candle. It's not really a great example because it's so close together. I'm really looking for one that just kind of really shows you exactly what I'm looking for. a 75% full on the previous candle. That's what I'm really looking for. And that'll give you a really nice example of what the damn thing looks like, if we can find it. I will never find one in this market. Solar City. Yeah, I guess. Let's look. Let's look. That's not even a dark cloud cover right there. Even though it's a nice candle pattern right there. It's not a dark cloud cover either. So I will never find a dark cloud cover in this market. Surprised I don't see one on UVXY, but that just oh well. You're out of a dark cloud cover, sorry. What happened to CTRP here after hours? It's like a fat finger or something? What the hell was that about? Alright. Yeah, maybe if I go back a day or something, maybe I'll find one. I really want to get an example for you. That's the whole point of this webinar, to get an example. It's amazing. Here, that's fine. Right there. Okay, VRX. Dark cloud cover right there. Candle opens above, closes more than 75% of the previous candle right here. That's a dark cloud cover right there. So that's bearish Harami right there. That's a Pearson right there. Let's keep looking for them. That's a bullish engulfing right there. Bearish Harami right there. All these topping candles right there, because you see the wicks are at the top. Bullish, because that's an inverted hammer at the bottom of a trend. That's a bullish signal. Bearish Harami. Hammer that sits in the middle of a chart doesn't really mean anything. You don't have to get worried about it. So going through candlesticks itself and candlesticks patterns, I can pretty much do this all day long and just call them out. Doesn't really matter. This is second nature. This needs to be second nature. Okay, you need to be able to see one of these patterns, especially if you want to do candlesticks and you want to read them properly. You got this stuff here, it's got to be second nature. The names have to be second nature? No. The fact that you are understanding what they mean means to be second nature. So if you see wicks at the top, you need to be understanding that that's possible bullish scenario. Wicks at the bottom, possible bullish scenario. So you're going to use these candlesticks now in coordination with the other stuff that you're looking for. For example, if you're looking at this chart here up at the top, right? You're looking, when a price comes up back here, you're looking for a double top. So at a double top, what are you looking for? You're looking for any sort of bearish candle patterns, alright? So first you're going to look for a bearish candlestick, alright? You did not see that with the first candle that pushed through here. But what did you do? What did you see after that was a bearish Harami that printed right there. Now that gives you the idea of this candle pattern itself here, that now we're going to reverse down, and the double top here is going to hold for a reversal to the downside. So the candlestick patterns that you're learning today are going to come into play for the chart reading that you've kind of developed over the last couple weeks, and the formations and double bottoms. So obviously Solar City right here today, double bottom, that's evident, right? What are you looking for at the bottom of a trend on a reversal area? You're looking for any sort of bullish reversal patterns, right? So that right there, it's a hammer, and this one right here is one of those rocket boosters that I like, okay? So those two patterns right there, those are telling you, hey, this chart's bottoming. Even when it came close to the bottom over here, an inverted hammer printed over here, telling you that the sellers are maybe not as willing to sell anymore as they were before when you saw the huge red candles. So the graphic depiction of what people are thinking about, okay? So they're thinking about maybe holding this area, okay? At this point over here too, when there's less bodies on the candlesticks itself, it's giving you the idea that the people are thinking that maybe they're not selling as much. Maybe buyers are stepping in, they're thinking they want to buy. So the less color you see on these candles at areas where they need to be, the less colors is going to give you the idea that the price may be reversing. I could copy that and post that into my notes section. I have a list of books there, so you guys can, if you guys have books that you want me to put there, definitely put that one up too. So as far as what we got, Pearson, dark cloud cover, bullish harami, bearish harami, bullish engulfing, bearish engulfing, wicks at the top meaning bearish, wicks at the bottom meaning bullish. And the candlesticks really just you're gonna need to use them in coordination with the patterns that we used. I mean, may it be head and shoulders. If you're looking, say for example, you're playing like a head and shoulder thing. Once you're up at, let's just try to see if we can find something that's possibility head and shoulder. Okay, right there on VRX, up at the top, head and shoulder pattern. Okay, so if you play this just purely based off what we learned last week, you would be looking for, and not just this wick over here, but you would kind of have to, because at this point you'd be looking for a head and shoulder area over here. So what you would do is, as the price came up to this area over here, which would be the other shoulder, if you're just using the formations alone, you'd go short here. You probably would never catch this short, because unless you're one of those guys that get in just a little bit before or something, but you'd probably never catch it because it actually never actually made a complete perfect head and shoulder. So like for me, for example, would I have caught this? Probably not. I mean, would I have caught this for some other reason, doing charts or trend lines or something? I can't tell you. But for as far as using a head and shoulder, you probably wouldn't have caught this because you would have been looking for a quick rejection candle off of that. But at the top over here, what you do see was you saw a bearish engulfing right over here, and it pulled down. Now, what the candlesticks itself is not as easy to understand the direction of the entire move. What you have to look after a pattern, after a couple candlesticks develop. Okay, I'll teach you this one here because they really don't teach you this anywhere else. It's not the candlestick itself that matters. We understand that. It's not the one candlestick that matters. It's not so much the second candlestick that matters. It's not even the combination of the candlesticks that matters. It's what happens with the candlestick after that that matters. Right there. So, what I'm saying is, here's the idea. Here's the candle pattern. Here's the trade. Okay? So, what you're looking for is you're looking for the idea, which would be a whatever, bullish harami, bearish harami, whatever. No, sorry, bullish, like a hammer or something, an individual candlestick. Okay? So the candlestick itself. Say like at the bottom here, you're seeing all these bullish signals right here. You got hammer, hammer, shooting star, okay, evening star, everything. Morning star, sorry. So you're looking at all of these candlesticks down here. Problem with this entire range of candlesticks is they don't give you a trade. They have no idea what they want to do, because neither one of them opens up on top of each other or over each other. So here is one of your first areas of a confirmed move. I'll delete all this. Bullish harami, right there. The next candle after it, which is that guy, okay? This candle here opens above the close of this candle, above the close of your bullish, okay? Pulls down into the candle. You really want your entry to be about 50% of this body here. Pulls down into this candle. This is your entry candle here. Once it opens above the close of this candle here, you want your long entry inside of this candle, risk to the bottom of this candle right here. So you have your signal. Fine, it didn't give you, great signals. All here it's been giving you the same signals. When this one happened here and it engulfed these two right here, became a bullish engulfing signal. Gives you the idea. So I'm just pretending that you're sitting in front of VRX here watching it, okay? Gave you the bullish engulfing. The next candle that opens above gives you the idea that now I want to take this trade long. Your entry is not, your entry has to, well, not has to be, but you really want it to be inside of this, because why, I'll tell you why your entry wants, you want your entry to be inside of this candle here, is because that's your stop also. So it gives you your entry, it gives you your stop, and obviously it gives you sort of a target already, but that's not really defined as much. The reason why I'm saying that's your stop is because if it goes under here, what it becomes a huge red candle. It becomes a bearish engulfing candle after that. So the reason why you cannot allow the price to go under the previous candle here in this case is because this red candle now, being that it opened above this candle here, will now become a bearish engulfing candle, and then it should be a bearish pattern. So if you take the entry 50%, what I try to get is 50% of the previous candle. Sometimes I don't get it, but once the price is inside of this previous candle, once it's anywhere inside of this previous candle, my arrow's just all over the place. Once it's inside, that's where your entry is. That's where your stop is. Anything less than that, you need to get out. Anything less than that, you need to get out. Because this candle here will now become a bearish engulfing. So it would completely negate the entire thing. So your idea, fine, you've had ideas all along here, but nothing really happened to the ideas, okay? Your idea, your bullish engulfing, your entry candle, your entry point, your stop. That's pretty much all these three candles gave you right here. Obviously a trade went along, never stopped you out, you moved into the trade, and then, well, you took it from there. So is that kind of clear or no? So now let's just look at random ones anywhere and see if that kind of works out as to be the same. Okay, let's look at these down here. Pearson pattern down at the bottom on RPX. Obviously this is RPRX. That's the candle. That's the engulfing. That's your idea now that I wanna go long. Okay. This is your entry candle over here. It did not come down to halfway in your candle, so you're still not like contented about it, because remember, this entire candle here is over here is your risk. Okay, so the bigger this candle is, the bigger your risk is. The smaller it is, the smaller your risk is, but also the tighter your stop is. And so all that kind of, you really have to think about all of that as this is happening. So what you have is, remember, I always try to get 50% of that candle. Okay? Delete all this. What you have is your bullish engulfing. Bullish engulfing. That was a bullish engulfing there too. Okay, bullish engulfing. They're all over the place. You want to get 50% of this candle as your entrance. This candle did open above, by the way. I mean, maybe by like a penny, but it did open above. So it's not really a clean cut one. Fine. We'll use this one. Bullish engulfing. Candle opened above gives you a clean, clear idea that you want to take this chart long, right? You tried to get halfway in between. On this candle, it didn't give you a fill. On this candle, it sure did. Even if your entry was, even if you had a 125 limit order in at halfway on this candle. If you had a 125 limit order, you didn't get filled here. You definitely got filled here. Your stop was still at the bottom of this candle here. Remember, if that candle opens above and closes anywhere through, it becomes a bearish engulfing signal, right? Negates the entire pattern. If this area here breaks, it becomes a break of a trend. It negates the entire pattern. So you want to make sure that whatever your entry trigger signals come from, that area remains your stop area until you clear it out, until you get over a resistance area, or until you start making a series of strong candles, strong patterns, an uptrend, something. So, signal, entry idea, had an entry for, you had a limit order for halfway, 50% of this candle here, you got fill on this pull here. You never got stopped out because your stops was right here underneath this wick here, and you're still getting the trade. You know, you were a little scared all the way through here, but it worked out. Minimize your risk. Now, why I try to tell you to get 50%? Because I'm cheap. I like to get this. I like to get the stuff cheaper. So I tell you to get 50% because I don't want you to risk from the top of the candle to the bottom of the candle. I don't care what the price is. Okay, I'm just giving you a reference. I don't want you to risk from the top of this candle to the bottom of this candle. I just want you to risk from the half of this candle to the bottom of the candle. So I'm already cutting your risk down in half. I'm already saving you half the money. So what this is here is this is sufficient size now when you come into this trade. It's sufficient size when you come into the trade. It's a full size when you break over this trade here. And that's it. Your efficient size, you stayed in. Your risk was only from here to here. That was your risk. That's your full size add on a retest of that trend. And that's it. Fish size, then add full size, then that's it. All she wrote. Even the first candle closed, it's okay to get an entry on the next candle. Yeah. Because look, you already have the candlestick pattern over here. You already understand that this is my candlestick pattern. If it fails this candle, we'll get out of the trade. We're done with it. It's fine. The whole thing breaks, it negates. That's why we got stops. So once you put your entry, a limit order, I like to do limits in cases like this. Okay, the thing gapped up right over it. You're thinking, oh my gosh, it's gonna, it's gonna rocket. You do a limit, a market order, and what if you get filled all the way up here in the 30s or something? While I could get you filled at 25 with a risk to 20. It's a 5-cent risk here on this trade that never got you stopped out on your efficient size. Say you wanted, I don't know, 4,000 shares of this. You did 1,000 shares here, but that's your risk here at 5 cents on 1,000 shares. When it broke over here, you added your 3,000 shares. Trades in the money. So your stops were assessed right down here, with giving you a entry into the trade with minimum risk. And then once it broke over here, gave you a full size position. I don't do those 10 times scaling into position crap. If you do efficient size and your trade's working with you and you see a nice breakout, if it gives you a reason to get in, jump in your full size one time. Don't waste time with doing that 5-6 time add-in crap. All you're doing is breaking down your average and burning your commission. Get a good efficient size in there at a decent setup trade. Once it breaks over the area that it's supposed to break over, just go into your full size one time. There's no sense wasting any time. You're wasting money. These last two, they were bearish engulfing, yeah. But you're already in the trade. You had an entry, at 125 limit. So you're filled in this candle over here. It got you really scared when you were filled in this candle really here. Because it pulled right back into this candle here. Got you that 125 order. You got filled, your 1,000 shares. Your stops are still at the bottom here. No matter what, your stops were still here. If you got filled and got stopped right away on the same candle, the trade's done. The trend's broken. Short it. But that's the risk that you take. So what I try to do is I set a limit. Sometimes it depends on what you're trading. Like Thinkorswim, you could do an order and a limit at the same time, right? On TOS. And that's what I kind of like about that TOS. For me, I have to do I'll open two box. So I'll hit my trade button and I'll have two windows open. 125 for 1,000 shares. 1,000 shares, limit stop at 120. And so once I get fill, click, orders in for the stop. So that's how I'll trade it. And that's how I do most of my trades. I always have a stop somewhere. So it's whenever I know that I'm trying to focus on getting into a trade or something, I'll just do it like that. Now if I catch one of those like fast mover type deals, obviously I don't have a time to put a stop in there right away. But it only takes me 2 seconds to just hit, put stop here, whatever. So anywhere that I click on the chart, if I feel like, okay, well I just want to make a stop here, I put it there and hit stop. So it'll still give me a quick enough area to do a stop. But there's no way I would go crazy getting wiped out into a trade for any reason. because as soon as I make it, even if like, you know, like the trade's in already and I don't actually have a window up, all I just have to find is a range where I want it to be. So I know that that's the low visually. I'm like, whatever, I click it right here, do stop, and then it'll just put me a stop in the order that I have. So either way, I'm not getting crazy, and my stop is never gonna be at that line too, by the way. Okay, my stop's always gonna be under that line, because remember, it has to break this here to break the formation. Right now your formation is bullish engulfing, price gapped up. Now, if you were doing a bearish one, for example. Okay. Not a lot of bearish on this RPRX here. It's a pretty good chart. Candles are tight on the Solar City. Are we glitching? We're not glitching, are we? Okay. VRX. Here. I'm gonna move slow. Let's try to make sure it loads properly. Okay. Here is your signal for the short here, right? You have a bearish harami. Okay? The only reason you're gonna go short on this trade, this now got your attention. This was, okay, the 6 getting extended. It's getting extended. Fine. There's no reason yet to get bearish on this trade. Right here, this is a no pattern right here. That's nothing. That's a dud. Okay. Even if that was that dud right there and you saw this huge bullish engulfing, you just take it long for that. Anyways, how far under 2 cents? Well, you gotta assess that yourself. Yeah, I would on something like that, I would give it 2 or 3 pennies under. You just kind of assess the range that it's at. Obviously, if it's DWTI, you know, you give it 50, 60 cents under. But if it's in that range from 127 to 122, you give it 2 or 3 pennies. Or 3 points, yeah. So, bearish harami over here gives you a signal that, hey, I want to short this chart. This gives you the idea that you want to short the chart. Now, if this candle, and sometimes the candles would fake you out, but this is candlestick reading just like everything else, and they're not 100% guaranteed. If this candle had opened here, I would not be inclined to short it at that point. The candle opened underneath the close of the previous candle. I really wanted an entry halfway in. So I probably would have never gotten into this little short here because I am that kind of a guy. I want to get an entry in this candle here in between so that I can minimize my risk. Did the chart actually work? Did it pull off of that? Sure, it did. Did I get the short? No. So I would lose out on that. But not like it was a huge move. I'm just giving you an example, okay? Because this could have been a total wash too. I'm just saying that that's the candle formation right there. Now, say for example, you're sitting right there, you didn't catch that short right there, but what you did catch was this, inverted hammer and a bullish engulfer. Next candle opened above. You tried to get fill in between this candle, you probably did get filled in between this candle right here. Stops at the bottom of this candle. Okay, remember your stops are at the bottom of this candle, into this trade here, okay? Trade runs up, comes back down, never stops you out. Okay? Never stops you out. That's your area that you're working with here. Fishing size all the way through. You need a breakout, Fishing size all the way through. Fishing size all the way through. Full size on the retest. And that's your trade right there. Okay, remember your fishing size on the push through because you are not adding into this. You're not the guy that's gonna get fooled into this. You need a retest, otherwise this entire thing can go straight to the moon and straight back down to hell because it never retested. It needs to have a footing. It needs to have a place to stand up on. Once the retest hits and it holds, that's your full size. So you can full size into that anywhere into this candle over here because obviously it's going to bump here. It's going to hang around. Once you start seeing it settle in and find support off the trend, that's now your new breakout point. That's your full size. So when fishing size here, never got stopped out because your stops were under this candle over here. Full size into this trade here, and then you let it go. Then you play it out. How would you know what your target is on this trade right here? It's pretty simple. That's your target. Connect there. That's where your target is right here from this trade. Full size from here, fishing size from here, that's your target. And that's how you know where your target is from these 2 points. So we're pretty good. We're pretty good. Sometimes it happens so quick. Yes, it does. That's why I don't love playing with the 1 minute unless I'm doing a fallen knife, a parabolic move, or I'm looking for an exact penny type trade where I'm like trying to nail it by the penny. Other than that, uh, I'll just do the 5 minutes, and that way I have more time to play with the chart. Because if it's a 5 minutes, it's basically every single candle here is a 5 minute time frame. Gives me enough time to evaluate the trade properly. If I'm doing this on a 1 minute, I would have so many candlestick problems. We would have a lot of issue, candlesticks wise. Would be nice if I should have never put it on that 1 minute. Okay, let's see if we can get a chart back eventually. Huh, should have never put it on that 1 minute. Okay, let's see if we chart comes back up. Well, that's always fun. Alright. So yeah, on this blank chart here. Fun times. I had a chart. Okay, I have a chart. Yes! Okay, maybe it's just VRX. Maybe they shut it down finally. Nope, it's everything. They shut down everything. Sometimes Scottrade does these weird updates like late at night, sometimes like this time. And it'll usually just like freeze up everything, so just part of the fun, you know. So let's see if we get a chart to pop up eventually. It'd be nice. That's during the day. Okay, I'm gonna leave it on this chart since I do have a chart. But all of these lines are, yeah, these lines are crazy, but that's kind of how I trade it during the day. So I'll X them out. Alright, we'll leave this up here just because we do have a chart. I don't have to mess with it. Okay, let me answer this question. So I don't, at the fear of not having a chart when I come back, I'm not gonna click on fit, if you're okay with that. I do think that fit moves up a little bit tomorrow. It was pretty bullish today. Nice confirmation on the daily chart. Look for a continuation candle on that, especially if it comes down half of that. Remember, it works the same exact way as a 5-minute candle. If it opens above, you want it to pull back 50% of that to get your entry. So the daily candles work exactly like a 5-minute candle, work exactly like a 1-minute candle. They're all the same. So if you want to play fit tomorrow and it opens above that candle, you want to make sure that you get a nice pullback on it before you play it on the long side. Do you automatically set a limit order for 50% of the prior candle once you see the bullish pattern? Yes, I do. When the next candle, yep. Yeah, if I'm bullish on it, as long as it opens above, I need 50% back. And I don't always get it, and sometimes I miss great trades because I'm being greedy for 2-3 cents. But yes, I always try to get 50% of that other one. And it's not like all the signals that I do it on. It has to be a pattern. Remember, you made me put my drink down. Remember, it has to be a reason I'm looking for this pattern, right? Now, can you see bullish haramis or bearish haramis or any candlesticks anywhere in a chart? Sure you can. Or are you going to take every single bullish harami or bearish harami or whatever you have? Are you going to take them at any point, anywhere in any chart? No. So Kim, what you're going to be looking for is you're not only just looking for these patterns, you're looking for these patterns in an area where we talked about from the last 3 sessions. You're looking for these patterns in a formation, a double bottom, a double top, inverted head and shoulder, something like that. You're looking for these patterns at areas where you're supposed to be looking for these patterns. Can you see bullish engulfings all over the chart? Sure. There's a huge bullish engulfing. Did it pull the chart down? No, because it wasn't really anywhere that it should be. Candle never opened underneath to confirm the bullish engulfing over here, so it negated the entire signal. When a candle does not open in the direction that you want it to go, say it's a bearish one, if it doesn't open underneath, it negates the candle right away. Negates completely. So for me, it's just something I'll overlook at that point. Now I'd have to be staring at, say, this you guys chart all day to be playing this one chart and to be looking at every single candlestick that prints. But if that's the way that I was doing it, sure, I would do it. But how do I trade? I trade off of trends, double tops, stuff like that. So like for example over here, you saw a double top right there. Evident that I would be looking for a double top over here. Soon as it came up over here, I call this a quick rejection candle because this candle probably just popped right here and just pulled right back. I'm short on this. I'm short bias on this, okay? And then even though the chart didn't wash, it still proved for a good short, right? So if you did not just the candlesticks, but if you just played this even off the double top stuff that we learned just last week, even if you tried to scale into this short, into this position over here, you know that your risk was over. It would have still worked out to be a nice short. Your candlesticks would never even come into play over here because it was just a technical double top that you were playing. So in this case over here, your candlesticks did not, apply, but other tools that you do have did apply. And so like this candlestick thing, it's not really going to be a series after all. It's just going to be a one-time thing. The candlesticks itself are going to be indicators for you to look for reversals at a certain area that you should be looking for reversals. Alright, Barry Scott, take care, bud. Thanks for coming. It does happen quick, and you just gotta okay, Kim, we're cool with that. So you want to look for them where you need to look for them, because they can happen all over the place all day long. You'll see patterns, you'll drive yourself nuts. They're only applying if you see them at an area where you're supposed to be seeing them, okay? I can try to look at that fit chart, and if we don't have a chart in 10 seconds, oh, we have a chart. Daily chart. Oh, we have a daily chart. Alright. Okay. Fit closed over the 50 EMA. Okay, definitely bullish on this one here. Watch for continuation. You want to try to see if you can get it into this candle over here. Into the candle. Okay, so are you going to get exact 50% on it? Probably not, because there is support down into this area here. Can you get 50% of it? Probably. I'm not saying that you can't. I'm just saying that, you have to understand that you may not. So your ideal entry for fit tomorrow would be $16.50. Bring it back to a 5-minute chart, and you'll probably see that that 1650 area so weirdly coincides with a very important area of support. Okay, it was a resistance area, it was a support area, it was a support area, it was a support area. So it just so happens that 50% works out to be a very important area on this chart. If the chart was to pull back to $16.50, you will be there looking for your candlestick patterns to show up, your hammers, bullish engulfing, stuff like that. Okay, so would you be looking for candles otherwise anywhere on this chart? No, because it doesn't matter. If it comes close to this area, you should be looking for them, because now it matters. Okay, chart might actually pull back to 1650. You should write that down. We'll see what happens. Okay, Alan, take care. So as far as the candlesticks go, I mean, you need to apply all of these things in combination. So what I'm trying to teach you is not just formations and patterns or just candlesticks. I'm trying to teach you how to combine all of them together, because that's what's going to make you a different trader. It's not going to be the one thing that's going to make you a good trader. It's going to be the combination of 10 different things that's going to make you a better trader. So what you're going to look for at areas of support, and we could go through this next time, or if I ever do get to record on L2, when you come down to say an area like this, say the chart comes down to an area like this tomorrow, what you're going to be looking for is you're going to be looking for the hammers, the bullish engulfings, that, right? That's a candlestick tool, right? What you're going to be looking for here is a technical tool, a technical bounce off a support. What you're going to be looking for here is a Fibonacci retracement. So that's 50%. What you're going to be looking for at this area is your L2 to support the move. So now once you start having all of these combinations of reason to get into trade, your fear of taking trades or finding trades or risking something on a trade is going to go away. If you have 6 reasons to take the trade and you get stopped out, you're going to say, well, it was a damn good trade anyways, and I should have taken it, and I did take it, and it worked out for me. And if you have 6 reasons to take the trade and it goes up 20 points from there and you never took it, you'll say to yourself, I had 6 reasons to take the trade, why didn't I? Where did you get the 6 reasons from? Well, where I come in, and I'm gonna, show you all of that stuff, and then eventually, when you do see all of those things lining up, when all your ducks are lined up, and you see that trade happen there, where it's a technical reason, where it's a candlestick reason, where it's an L2 reason, everything lines up, you're gonna be like, I'm taking the trade. And you're gonna be confident in playing charts a little stronger at areas where you need to be strong. So, and you will, Michael, you'll get that vision. But you need to learn every single piece of the puzzle individually, and that's why I mean, like, it's sometimes it gets a little repetitious where I say sometimes the same thing over and over and over, but it's just the same things over and over and over. People have been trading for 20 years, they don't have anything different from me. Their candlesticks are candlesticks. My candlesticks are candlesticks. What's the difference? So there's nothing different. The knowledge, the way they trade, the actions they make, the patterns they make, they're all the same. Nothing have changed over the time. It's just that you have to change. You have to adapt. You have to learn to figure it out how to use these tools to your benefit. So if tomorrow this chart gets down to this $16.50 range, you're going to be looking for a whole bunch of different things. A whole bunch of different things that's going to tell you to play it. Okay? You're going to be looking for the technical bounce, first of all, your candlesticks, your L2, watch your volume, watch your other indicators, your MACD, your stochastics. Watch how the day's trading. If SPY's 400 points down or something, just obviously don't trade that, because obviously you're not having a good day. So I'm just saying, so just keep an eye on everything around you, and when you do get to that stage one day, you'll have 6 reasons to take that trade at that point. And when it works out, you're going to say, now that was a great trade. And when it fails, you're going to say, I had so much reasons to take the trade. I'm proud of myself for taking the trade, even though I got stopped up. So, anyways, let me stop recording.